Hi, I'm Amy Smith with the Market Wrap for Wednesday, July 27th. The market tumbled again on Wednesday as earnings news and a surprise drop in June durable goods orders rattled investors that were already on edge due to deadlocked debt talks in Washington. Standard & Poor's cut Greece's credit rating by 2 notches today with a negative outlook. The euro fell and the dollar rose on the news. Tech shares were weighed down by Juniper Networks, which dove 20% after the company warned late Tuesday that its second quarter results would miss expectations. The Nasdaq slumped below the 2,800 level and headed for the 50-day line. The index lost 75 points to 2764, 2.6% according to early readings. Preliminary volume was higher than Tuesday. Mounting distribution days, as well as weak action of market leaders, has changed the current market outlook to market in correction. The S&P fell below the 50-day line in heavier volume than yesterday. The index lost 27 points to 1304, 2%. And the Dow lost 198 points to 12,302, 1.5%. Dunkin' Brands Group soared in its IPO debut. In terms of coffee drinking, Dunkin' ranks number 1 ahead of rival Starbucks in terms of customer loyalty over the last 5 years. The company plans to double the stores it currently operates. While gold bullion and gold and silver miners have outperformed the major indexes this past month, the miners struggled today. Silver wheaten fell 5%. Gold core slouched 4%, New Gold dropped 3%, Royal Gold shaved 2%, and First Majestic Silver lost 7%. Precious metals have been a flight to safety in an uncertain currency environment. One of the best performing groups of the day was household office furniture, but the group's gain largely reflected one stock, Tempur-Pedic. The stock is number 32 in the IBD 50 and one of only 2 stocks that were in positive territory from that list today. Tempur-Pedic gapped up and rose 9%. The maker of luxury mattresses, pillows, and cushions announced second quarter earnings, which rose 65%. Sales were also up 30%, which was above expectations. And the company raised earnings and sales outlook. Though earnings have slowed from the triple digits, Tempur-Pedic has had strong earnings for the past 7 quarters. Sales have remained above the 25% minimum you look for the last 7 quarters as well. Fund ownership has increased for 3 quarters, and 2 funds that have a position in Tempur-Pedic are Fidelity Contrafund and T. Rowe Price New Horizons. Tempur-Pedic made a new high after a rebound from its 10-week moving average. So what is evident in the chart that might indicate this stock would double from its breakout in December? Tempur-Pedic had an amazing 26 weeks out of 33 weeks up. And as the stock advanced, noticed how tight and orderly the uptrend was. The stock really hugged the 10-week line, only violating that moving average for 2 weeks in June. Another sign that this stock was a potential leader was the RS line, which was already in new high ground ahead of the stock breaking out. With the market in correction, be sure to keep watching for stocks that are forming bases or ones that are holding up. These are often the ones that will shoot out of the gate when a new uptrend begins. And stay optimistic. Corrections often allow new leaders to emerge when a new uptrend begins. Here are some words of wisdom from legendary trader Jesse Livermore. Do not have the desire to always be in the game. And don't try to anticipate what the market will do next. Simply go with the evidence of what the market is telling you. So for now, the market is in a correction. And that's a quick look at the market for Wednesday.